traders, welcome to Charts and Coffee. Happy non-farm payroll Friday, everybody. We're taking a look at the post-NFP reaction, which with what has to be considered a fairly colossal quote-unquote miss. This is going to, by Powell's own admission, right? He said on Wednesday during the press conference that if jobs were to start to show signs of erosion, that they're going to have to move sooner than later. And that is what is helping in large part equities moving higher. Now, equities, specifically the S&P and the NAS, were already in a fairly decent move because in the announcement of $110 billion buyback from Apple, we have strength in a high concentration weighted stock within these indices. This is not Apple alone, right? Apple might have kept price action fairly bullish, but this is non-farm. And you can look at that 5-minute candle, that instant reaction at 8:30 of 175,000 print when consensus was closer to 218 to 238,000. And I'm sure there were some expectations across banks and institutions that were lower. There were certainly some that were higher. But obviously, the bulk of market participants were expecting a far stronger NFP. And this is, of course, where bad news, a miss in jobs, is bullish. So this is good news being bad, or bad news being good news, right? It's the latter. Bad news is bullish, is good for equities, and we're seeing a monstrous, it was about a 50-point move in the S&P on that NFP reaction, and 50 S&P points is a fairly considerable move. And in terms of what happened on the NAS, you'll see we launched from about 17,760 to about a high of 17,960. Again, 200-point move in the NAS. We did have our bonus session in the Sector Secrets Mastery this morning, and there were two strategies that for any type of hot zone we will do in the room. So this is live trading in the room, futures contracts, futures options, micro futures that we do in the Sector Secrets Mastery. I tend to focus on the mini futures. The Lorna bot tends to focus on options on the minis or the micros. So once you get the baseline of analysis, what is the baseline? What is the sentiment read? In this case, we were bullish, mostly in the NAS, but marginally in the S&P because of sentiment being on the bullish side of things. We also knew then that Apple was a factor. That does matter a little bit. But look, Apple's buyback, if this number printed, say, for example, 270,000 instead of 175,000, this would not be the reaction, right? So remember, this does eclipse the Apple narrative. So please keep that in mind. All right, so when we have movement like this in the broader averages on a disappointing number, this is a macroeconomic move. This isn't, hey, the economy is so healthy, let's buy. This is, hey, this jobs number is eroding. The Federal Reserve has a dual mandate of inflation and jobs. They're going to shoot for that inflation target while at the same time making sure that their monetary policy, or in this case, the delay of rate cuts, is not hurting employment. And this is the first evidence we've seen of, since that was really put on the table by Jerome on Wednesday, it's the first time we've seen a massive miss in NFP, with that being highlighted. All right, so the next part of this is, I mentioned there's two strategies, right? So once we get the baseline understanding of which way we're more likely to move, previous session close, other sentiment reads had us bullish. The next thing is, how can we put the trade on? So I like to wait for price to move into an hourly price movement range of support. And the other strategy that we use simultaneously in the room is something the Lorna bot does that I alluded to earlier, which is what's known as a strap or strip straddle. So what that is, a strap straddle is an options trade that you can do in the futures contract, so micro or mini options, where once we've done all that baseline analysis, you have essentially a long call position with puts. So it's a 2-to-1 ratio. Strips and strap straddles are something that I like to do. They're directional options debit plays. They're directional. And we're taking advantage of a move by saying, look, I'll put a safety net under the position by way of a long put, but I'll take advantage of my directional probability by getting long two calls. And it's usually a 2-to-1 ratio. So you have a safety net and then you have your directional play. So we're not trying to stay neutral. It's not a 1-to-1. I'm not a fan of neutral strategies at all, especially in an event like this. So we had one of our members it put on the straddle with the futures contracts. And from what I was reading in the room, had a 6-figure morning. So that's the power of high impact moves. And that's the power of having directional bias, a risk management strategy, and an expectation for which way the market's most likely to move when we get non-farm. Now, what if it went the other way, right? Okay, Rog, I get it. 6 figures, that's massive. That's massive. What if it went the other way? Remember, so the 2 calls would lose value, but the put would increase in value. Is it equal? No, this is a biased directional debit. However, it will do what? It'll offset, not completely, obviously, but it will offset some of the losses. And so that's why those things are really interesting ways to take advantage of high risk. Let me emphasize high risk, high volatility events. All right, so that is the NFP reaction. And then it's been over 30 minutes. So let's go take a look at what the target rate probabilities, the Fed fund futures, which is another contract, like gold, like bonds, like crude, like the NASDAQ futures, is a contract dedicated to one thing and one thing only. What are rates likely to be at the different meetings? So the contracts are aligned with the meetings that the FOMC will have. We're not expecting any kind of adjustment for June. In fact, that's largely discounted as a hold. Take that off the table. We're not getting cuts in June. July 31, we're very likely not getting cuts in July either, even though the cut column, which is the 500 to 525, did rise a little bit, not enough to really convince anyone that we just have a slightly higher expectation for a cut, but it's still firmly in the hold camp by nearly 58%, of a 58% expectation. September is where things are getting interesting. So one of the things that I sent out to Sector Secrets Mastery members yesterday as sort of a preamble to what we were getting this morning with NFP was, one, Powell put NFP in a far more important light at the press conference post the FOMC statement. And the soonest we would likely see adjustments to be made for a cut would be likely September, unless it was an egregious miss, maybe then July. So adjustments of rates over summer are not unheard of, but you can definitely see here now that the 500 to 525 column is in a different place than it was before the announcement. So if you take a look at my notes, we keep notes running constantly during sessions in the mastery, so we can all kind of keep pace with the levels, what I'm looking at. So members get these notes. You're getting a little sneak peek of the notes that we do in the room. Notice that September 18 meeting was at a 38.4% expectation of a hold, 38.4, and only it was a 46.6. So what's happened? I think the most important thing is what's happened is this column has shrunk. Now again, remember this column 25.5 before the NFP was at 38.4%. So it's dropped 13%, right? There's not a whole lot of movement here. You might say, Rog, this was only at 46.6, is now 49. Oh, but take a look. This is a 1-cut column. This is the 2-cut column. So what's happened is, take a peek at where September is. There's a 23% probability that we not only saw a cut at the July 31 meeting, but we'll see an additional cut at the September 18. So that's what that 23% is implying. Look, this is a much more dovish September meeting and even a slightly more dovish July meeting expectation. And that's why equities are up. They're up because non-farm payroll missed, suggesting that the Federal Reserve is going to have to get off their collective duffs and get to work, getting us some cheaper lending rates, some cheaper money. The stock market loves it. Whether that's the right thing, look, gang, take all the opinion of what inflation's really doing, whether that's good, whether that's bad, take it off the table. This is what is being reflected in the data. And that's what we want to keep an eye on as we go forward. All right, so let's go ahead as always. So that's a breakdown of NFP, probably the most important thing macroeconomically that we could see in May. It definitely gives May a very different stance as we go through the remainder of this week, which is the remainder of today, into next week. Because two things to note is that the S&P and the NASDAQ have both launched themselves well above the anchored VWAP, the anchored volume weighted average price for the year. And that puts us in the bullish hemisphere. And then I think also to note is the string of red bearish candles. Now, this is not a traditional Japanese candlestick candle. This is a candle that gauges momentum and trend and sentiment, as well as participation. And these candles, for the first time since April 11, are not bearish. So we'll see where we close. It's a long way between 9:11 a.m. and 4:30 p.m. 4 p.m. But 9:30 to 4, we'll see what happens with price action. But if we can close above that anchored VWAP, which we were able to yesterday as well, by the way, if we can close above that anchored VWAP and with a yellow neutral candle on the indices, this is the first sign that the bearishness and the volatility and the uncertainty that really just plagued April and even the first week of May might finally be subsiding. Because look, one of the things that happens when humans are uncertain, typically, is that they're certainly not buying. The action shows historically that uncertainty, not only in the trend, but uncertainty around macroeconomic impact. What is the Federal Reserve going to do? When are they going to cut? We don't know. Most traders are not going to buy into that. They're going to get flat or they're going to sell. Panic is the sell button, right? Optimism is the buy button. We're not optimistic right now. Could non-farm payroll flip that switch? The other chart that I'm looking at is, can we firmly get below some key levels on the VIX? The VIX being at and above 16 throughout April is so much of the reason we saw first and second standard deviation volatility moves way outside the 68% probability of what we typically see. It's why we did not see a lot of trending action, right? We saw so much chop. Even the trends to the downside were never really given enough traction to say, hey, this is a downtrend now. We had bearish chop. We had a lot of chop and volatile chop at that. There's vanilla chop. We just go back and forth between support and resistance levels. And then there's what we had in April, which is something we haven't seen to that degree of extreme volatility in many years. If we think back to 2019 Q1 or even 2020 Q1, there was direction, right? There were lower lows and there were lower highs. We can trade that. We're traders. If the markets are going up or if they're going down, we don't care, but they've got to go somewhere. So what happens again when human beings are not convinced of follow through, which needs what? Certainty. They don't do anything. And what we've really seen throughout April were in many ways algos trading against each other. And this notion that algos are all at a fixed spot, all doing the same thing in the same way, is a common misinterpretation of what algos do. There's 5 main types of algorithmic logic. I'm sure there's way more than that out there, but there's 5 very popular ones. And 2 of those are probably outsized the most popular type of algo. But the notion that they're all doing the same thing at the same time is sort of really an incorrect assumption, as if it's us against them. Sometimes it could be them against them. And if you want to know what Skynet versus Skynet looks like, take a look at the bulk of April. Human beings weren't really that enthralled with what the Federal Reserve was saying and the lack of clarity. But algos have still got to do what they're going to do, right? They're programmed by a human. This is true. But when the criteria is met, they just get to work. And what's really interesting about so much of April is we got a really good look at what happens when algos just want to battle each other. And I think we saw sort of, what's that, rock'em sock'em robots? That's really what April reminds me of. And it's not a great time for trading. If you're wondering what happened there, that's what happened, right? Does it help us trade it? No, but hopefully in the future, when we start to see action like that, elevated VIX for a prolonged period of time, not a session or two, which is the norm, but for pretty much the entire month, we start to see action like that. Now we know what to look for. Right. And that's really a big part of having seen it now. When we see something like that again, we can take action. And like I said, if you've been trading for less than 10 years, We haven't seen anything like that. I've been trading for over 30, and I will tell you, I haven't seen periods of time where we had a VIX range set for an entire quarter and spend an entire month in, just absolute bonkers land north of the VIX for a prolonged, north of the norm, right, of the VIX for a prolonged period of time. What's happening the last two sessions? We are finally getting below 16, staying below 16, and you can see here now the VIX is reading 14 and change. Inside 12 to 16 has been where the account growth, the follow through, has largely been. That's where Q1 growth, I know for me and the Sector Secrets Mastery, was ideal because we had trends, but we also had a VIX moving very consistently between an established range. It's not 16 that's the magic number. It's where is the range, which just happens to be a ceiling of 16 and a floor of 12. So we're coming back into that sort of normalcy, if you will. That's going to bode really well for follow through, which is something that's really plagued us longer term in April, right? So getting some really good levels that are coming about. Very excited about that. All right, so let's go ahead and jump into some questions here as far as different impacts. Again, earnings. Look, obviously it was more than Apple out there, but please remember, the reason I mention Apple is the disproportionate weighting that it has in the XLK, in the NASDAQ, in the S&P, and even the Dow. Other earnings did come out, and those are going to obviously, when we're in a good mood, we start looking for other good things. That's just market behavior. So obviously higher highs put a lot of folks in a good mood, and we'll start to look at what else is good. When things are bad, we start to look at what else is bad. So the sentiment and the price action feeds what we tend to focus on. So clearly, as the VIX drops and certain levels are broken to the upside, the general sentiment of the market, the certainty around the market behavior will start to clarify. It's Friday, and I don't want to make too much of it yet, but it's definitely a step in the right direction. All right. So next up is... All right, what do I think about Chevron? Yeah, Philip, I definitely like Chevron. There's a lot of things that are starting to look very bullish, that are starting to look very viable. I do like Chevron. I do anticipate it'll probably be a little bit higher this morning, probably over 161 and a half or so. There's two things I want to remind everybody. It looks so great to say, oh, non-farm payroll missed and everything launched higher. However, remember, if we printed 275,000 instead of 175,000, we could very well be looking at a different move of somewhat equal scope to the downside this morning, because if jobs were extremely healthy or a significant beat, that would not put the screws to the Federal Reserve. So please know that, yes, it was a significant miss where the consensus range was between 218,000 to 238,000. We printed 175, but what if we printed 275? What if we printed 300,000? That would be a significant move to the downside. And that's why in a lot of instances, I said, you know what? Let's wait for NFP because Powell really put it on the spotlight. We have the remainder of May to go. We really want to see some of these metrics like the anchored VWAPs and the VIX levels normalize, and then we'll start to get our follow through. But yes, Chevron is probably one of my favorites. In fact, the watch list that we built with members yesterday. My members, you can check that out, the Thursday swing notes. We have quite a few names, and Chevron was definitely there. Very cool. All right. Next up is, where is the VWAP anchored? So every year, David, I anchor the VWAP on the first trading day of the month, not the first trading day of the year, not the first day of the year, the first trading day of the year. And so in this instance, it was Jan 2. But whatever the first trading day of the year is, that's going to be it. So we have our New Year's, we have the first day off after that, and then anchor. So for me this year, it's Jan 2. All right. As far as the intraday volume weighted average price levels, for something like non-farm, you're going to end up with, say, a 2 a.m. or a 7 a.m. Once the bell rings, I'll rely mostly on the 9:30 for the New York session, if you will. Now, for trading pre-market, right, like 8:30, 7 a.m., an hour, 2.5 hours before the bell, you have to use an anchored VWAP that's anchored to action out of Europe or action out of the early pre-market in the US. So that's where 2 and 7 a.m. will come into focus. All right, gang, as always, thank you so much for being here for Charts and Coffee. I will see you all on Sunday for the Top Tier Outlook show at 6 p.m. right here at the Simpler Trading YouTube channel, my YouTube channel at Raghee Horner, and also my X feed over at Raghee Horner as well. Be good to each other, gang. I'll talk with you soon.